So if strategy continues at this pace, it could accumulate like 300,000 Bitcoin a year. And here you see one single company removing the possibility for short-term bear market happening basically. So it's moving the market. Like when you have such a consistent buyer of Bitcoin, the effects are extremely important on the market structure. Consider one or two orders of magnitude of this in the future, and the size of the potential purchases of strategy in the future. At some point, as Michael says, it could be like 1 billion a day. In the future, it could even become 10 billion a day. And so that's where you see that the like price prediction of $5 to $10 million are extremely probabilistically accurate in my view. So like the ability to buy Bitcoin at 90K, it will be considered as a generational opportunity. And I think we will smile at that period. It will become a monster, as Michael says, and not only strategy, but the industry players that are focused on deploying their strategy as well. So Capital B is positioning for this over in Europe, and the market is huge.
How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. Today, we were joined by Alexandre Laizet, who is the board director of Bitcoin-denominated at Capital B, Europe's first Bitcoin Treasury company. So let's get right into it. Here's our interview with Alexandre. Bonjour, Alexandre, et bienvenue au One Chair podcast. We'll switch to English, but I always wanted to do this in French one time, so you're the perfect guest for that. So, welcome.
Bonjour, very nice to be on the pod, and I really like the name. That's a very good one.
Thank you. So maybe we can start this off with a bit of a background on your end. Could you let us know how you first got involved in or interested in Bitcoin, and then involved with treasury companies?
Sure. So I discovered Bitcoin in 2020 during COVID. I discovered I had no freedom left with the lockdowns, and Bitcoin was the solution. And so I adopted Bitcoin, and it changed my life. And I made it, of course, my whole purpose in life to contribute to Bitcoin adoption as the one thing that has the most impact on me, my family, my company, the society, and the world in general. And so this has led me towards founding the first Bitcoin treasury company in Europe, as you know. And before that, to contribute to Bitcoin institutional adoption with systemic banks. As an economist first at large corporates, and then as a digital asset lead at Accenture, the largest technology consulting firm.
And could you dive a bit deeper into the creation or the origin story of Capital B and how you got involved with it and how it evolved to this point?
Yeah, sure. So Capital B has had multiple lives before it started in the 2010s as a media company. Then the company started acquiring a lot of web companies in different areas. And at some point, there was too much of them, and it got restructured back in 2023. At the time, it was named the Blockchain Group, and it was mainly due to a company in digital asset wallets, and that company got liquidated, and the company got restructured. All the companies that were not profitable were liquidated or sold. And after that, in 6 months, the new board and management at the time managed to achieve profitability just after 6 months, half 2024. And based on that, with two profitable operational companies in technology consulting, the board decided to look into the possibility of launching a Bitcoin treasury company strategy inspired by strategy, at the time MicroStrategy, and we got connected by a joint lawyer that we used to work with, and I will thank him all my life, of course. And so I met with the new board of Capital B, and in very short order, we discovered that that was the best thing to do. And in a matter of 3 to 4 weeks, or even less, I joined the company. We bought our first 15 Bitcoin with a 1 million capital raise, and we started the strategy. At the time, there was only Strategy and Metaplanet doing that, and also Semler had started to buy, but they were not like Strategy and Metaplanet completely focused on maximizing Bitcoin per share over time. And so we were the first in Europe to do it. And I think together with Strategy and Metaplanet, we have inspired all the wave of Bitcoin treasury companies with the success of the stock price. Capital B went from 15 Bitcoin to more than 1,000, 1,500 in June, and now 2,800. And the stock rose by 4,000%. And it was at the time the number one stock by performance over in France and in Europe. Like Metaplanet in the world in 2024 and Strategy in the world like over the 4-year period. So this, I think, inspired a lot of new companies to join. And what's been very differentiating for Capital B since the beginning is the peculiarity that we have had the most issuance of convertible bonds as a proportion to our balance sheet, because we have denominated those bonds in Bitcoin. And so we don't have the fiat liquidation risk even at maturity. We have Bitcoin on one side and Bitcoin on the other. And that has allowed to provide record BTC yield with 1,600 plus last year. At the same time that we are counterintuitively one of the companies with effectively the less leverage, but with a great leverage possibility based on the BTC yield that we generate. So that's been really our core area, to focus on maximizing Bitcoin per share and to issue innovative Bitcoin-based products in the market for Bitcoin-based investors. At the same time that we've also been the number one institutional grade Bitcoin treasury company in Europe, with the largest volumes in Europe, and with the number one institutional ABB, so accelerated book build in equity, meaning a raise in equity with 30 plus institutions back in September. And since then, it's been a bit more quiet in the industry overall, and for us as well, as we are planning for the next steps, and as well preparing to potentially issue more products over this year with a new capital market context and more competition, but as well more opportunity, in the sense that a lot of investors with the period of last year have come back to quality, let's say, and are valuing again more the track record and the discipline and the focus and the value creation potential. So that's the story of Capital B in short. Oh yes, and of course, something that's been extremely important is, of course, the investors that back us since the beginning. So Adam Back has invested close to 10 times, and Tobam, the first French asset manager to adopt Bitcoin in 2017, and Fulgur Ventures and UTXO Management. So trusted and very important players in the Bitcoin ecosystem.
Yeah, you mentioned the Bitcoin-denominated convertible bonds, and This is you're kind of alone still in the space, in the Bitcoin Treasury space, with this strategy, and I was surprised about that because it's such an elegant way of issuing convertible bonds that I would have thought by now others would have copied this model. But are you talking to other treasury companies that want to know how this works, or do you know why you're the only one doing that?
Well, it took 3 months for the company to set the foundations for this. And it's not just like to say that you will issue Bitcoin convertible bonds. You need the right legal setup and the right capital market conditions and the right investors for this. And to have those conditions combined, it's a lot of conditions, in fact. So it's not that surprising that not other companies have done it in that respect, because even if you wanted to do a similar thing, it might not be as qualitative as the setup that we've done. So that's one reason. Then another reason is, track record, because we have issued so much of them, and investors can see the track record. They don't necessarily see that with other companies. Or as well, the market conditions, simply because the market has been more difficult over the last 6 to 9 months. So in that respect, of course, even if companies wanted to do it, investors are more careful in their capital allocations, and they might do it later on. But we are also working on those types of things as well, of course. So that's one. Then you have seen some type of innovation along those lines, but the bankruptcy remote SPV structure that we have set up is quite unique in that respect.
And you've mentioned in the past that this strategy of the Bitcoin-denominated convertible bonds is your nuclear reactor. Is that a strategy that you still want to follow, or will you maybe diverge a little bit?
So yes, and at the same time we will have, of course, more strategies. That is one key component and the key pillar of Capital B, because at any time we have the ability to do a raise that could be the equivalent or more of the current number of Bitcoin that we have on the balance sheet. So that alone is extremely important for a company. And it's not really possible with fiat instruments, because if you do a fiat instrument, you are limited to about today, as per the market practices, to about 15 to 20% of your market cap. And then with Bitcoin-denominated instruments, you can go up to the size of your fully diluted market cap, basically, because an investor can really take up to like 50% of theoretical ownership, and you could have more investors. So theoretically, Capital B tomorrow we have 2,800 BTC plus. Theoretically, we could do another operation of the same size. And that's, of course, unpredictable, and it's not guaranteed. But the mere possibility of doing that with a premium is extremely important, and provides one of the most potential for accretion in the market. And I think it's very underestimated. And what's been a bit slowed is the fact that investors, when they do this to increase their Bitcoin amplification. And they will typically do that when they see or feel that Bitcoin is moving aggressively or is about to move aggressively to the upside. And so it might take a bit more time, or you can have an investor that has a bit more tolerance for that type of timing. And in that respect, they could do it right now as well. So that is really, that's why we call it the nuclear reactor. Is at any time you can create fusion and as I said, obliterate expectations But you can also have your expectations slowed down because of the market going down as well at the time that you are planning for operations. So I think we've had a bit of delays in that respect in terms of doing a major operation of those types of sizes. But I'm confident that one day we will be able to do it, and that's my key objective, and that's what I work on a lot. Then at the same time, we also work on fiat type operations, either in equity or in convertible debt or in perpetual type instruments. So those are a lot of levers really for the company to develop itself. So in terms of time allocation at the company, I will always dedicate like 20% of the time at least to develop those big size opportunities that take more time but can be extremely transformative. It's the 80-20 rule. Huh? It's the 20% that can deliver the 80. At the same time, you also have to allocate a lot of time to the structural projects that allow the company to automate and to scale and to institutionalize the capital markets efficiency. So think about anything that a company can do to improve liquidity, accessibility, and have different possibilities to issue digital credit, either privately or publicly. So we've been authorized to do public offerings. It takes some time to, of course, get to the final steps with authorities always, but those are the types of things that we work in the background. Aside from other opportunities that we have specific to the French market, both because, of course, of the high taxes compared with the stock portfolios, and as well, either in Europe as well, of course, too, and as well, given the peculiarities of French market and Luxembourg markets in terms of the structuring of innovative products that we can do, and both in privately and in a public offer manner. So those are the types of things where we dedicate a lot of our time as well, because at the end of the day, what matters is to have a machine that works day and night and that is really accumulating over time. And on the side, and that's the key advantage of Capital B, to have the possibility at any time to double your balance sheet and to generate numbers of BTC yield that are not seen anywhere else in the market. So our key goal, we've seen some market action where, or market reactions where BTC yield doesn't seem so important anymore. My key focus is still on BTC yield, and it's how to maximize Bitcoin per share. And sometimes it involves taking a bit more time and structuring the right steps to maximize that number, basically.
Yeah, makes sense. And we've seen obviously that the market hasn't been favorable for a lot of the Bitcoin treasuries. Probably the only engine still that is roaring is obviously strategy, but that's because they're ahead and they've had time to develop this engine, right, with their perpetual preferred shares now. And you've mentioned exactly perpetual instruments. So maybe we can deep dive a little bit here. So you're also looking at how to get some perpetual preferred share style instruments for Capital B within the French regulation.
Absolutely. With variations and adaptations, and it can be this framework or another one. We have flexibility, and we see what works in the market. What works is the instrument of strategy. It's Stretch, STRC. That's the most successful product today in terms of digital credit. It's already close to $4 billion. And so that's really the best innovation that we've seen in the industry for a long time, and together with the Bitcoin convertible bonds. But this is the specificity of having an instrument that is publicly listed, tradable for institutions, for retail, and that provides a new value proposition, not only an amplification of Bitcoin itself, but as well a reduction of volatility and the potential to have a more predictable rate of return, considering, of course, the risk on the side that always exists, of course. So in that respect, the possibility for a Bitcoin treasury company to have a form of monetary instrument with a high interest rate is a necessary and key part of the arsenal to win the war for more Bitcoin. And so we are definitely working on this. And of course, we cannot promise things in advance, but that is a core strategic priority at Capital B. At the same time, you have also market realities whereby the size matters a lot for the success of these products. And so you should also consider that a company of the size of Capital B is a long-term trajectory to reach full potential. And that's where a lot of the opportunity lies in terms of an equity investment. So when you see strategy, the path of the equity is extremely strong, of course, in the early beginnings, and then the company basically runs for the credit investors. On our side, it's a bit like we've not yet had the path from 1 billion to 100 billion. We've gone from 10 million to 200 million. At some point, we were at 700 million and even 1.4 billion on a fully diluted basis. I think like in 3 to 5 years, people will look back and say, those valuations were crazy. Those people were so lucky. And I don't know how I didn't get involved and this kind of things. But it's always the same. You have the choice between cheaper price and higher perceived risk, or a higher price and a lower perceived risk. And so that's really the difference. So for a smaller company, like any other company than strategy, basically, and especially the ones that can reach regional leadership, which we are positioning for, I think the opportunities will be enormous when the Bitcoin price is coming back up. Even if price is not important for Bitcoiners, it is important for investors. And in that respect, it increases the capital market activity potential, especially for companies that have a high convexity potential. So where the convexity is really the possibility to really amplify the potential returns. Our capacity to generate a very high number of BTC yield is, I think, one of the highest in the market, if not the highest.
Yeah, and I think I don't remember who mentioned it, that going into Bitcoin treasury companies is like going into Bitcoin now in 2013 or something like this. And so yeah, absolutely, it's a great opportunity looking at the valuations. Just maybe coming back to the perpetual preferred shares. So we've seen Strategy come out with STRE, so denominated in euro. Is that influencing you in any way?
Yeah, of course, that's a reality in the market. Strategy has issued a product in Europe out of Luxembourg. And so effectively, it is both the creation of an industry in Europe, and it's also competition. So at the same time, we are not in competition with Strategy. And effectively, the success of STRE is also going to increase the success of our own potential issuances. Why? Because, of course, investors will look at Stretch and Strike and Stride and Strife and Stream to look at how the different properties of those instruments were, and they will look at our instrument if and when we issue it, and analyze and assess based on those market elements. So you have to consider that Strategy issued 600 million of STRE for first issuance. That's quite significant. And so it's also demonstrating that there is a market for this over in Europe. And so that's extremely positive. You know, when we launched the equity side back in November 2024, Strategy was in the market for 4 years. And so it was the same. It's both the creation of an industry, and at the same time, investors have the choice between one company or the other. So it is our role and responsibility to contribute to a form of complementarity in the market by having a different type of instrument that could be also the same, but you will always have a form of difference because the issuer itself is different. So in that respect, I think, yes, it influences what we do, because when we issue, if we do it, product, then it will, of course, be looked in comparison with the ones of the other players in the industry. And our product, if we issue it, will be stronger together with the ones of our peers, because then you have an industry and investors are reassured that they have multiple options that they can compare, and they can create a benchmark and so on. So I think it's really the birth of the digital credit industry that we are witnessing. And that will take, I think, 4 years for it to mature and grow to the scale of what we've seen with the equity last year.
Yeah, I fully agree with that. And I think what you're describing is we're starting to see it in the US, right? With Stretch obviously being the main product issued by Strategy, but SETA from Strive is also a success. And it started actually hitting par once STRC got established, right? So you really see that, yeah, it's a win-win, it seems like.
Exactly. So the success of Strategy is the success of all other Bitcoin treasury companies, and the other works as well. The success of all other Bitcoin treasury companies will contribute to the success of Strategy, and that's the beauty of the industry. At the same time, you are in a competition, and we are all in a competition for more Bitcoin. So that's the reality of the market. But overall, you want more Bitcoin adoption. And so that's why, there's been a recent interview by Michael with Danny, where like some people said, oh, but Michael was a bit strong in his response with respect to the comment that there would be too much Bitcoin treasury companies. But I very much agree with Michael. Like you never heard a Bitcoiner say, will there be too much people that adopt Bitcoin? Doesn't make sense. The real question is about the stock potential performance compared with the others. But that's every investor, for every investor to make the decision. And in any case, you can really never say that there is too much Bitcoin adoption if you are a Bitcoiner. It's very contradictory. Then, of course, you can have criticism on some corporate actions of some companies, but criticizing company just because they add Bitcoin on the balance sheet is a bit strange for Bitcoiners. So, I think that it's really positive, and I think that, as Michael says, you cannot measure the success of a strategy, of any strategy, really, in a matter of a few months or even a few years. It takes time, and it took 4 years for strategy to be adopted by hundreds of market participants, and to be realistic, really by maybe a handful of market participants. And so it will take again 4 years for really 100 or 200 companies to really be serious about having a KPI of Bitcoin accumulation, and as well for digital credit to reach industry standard levels with asset managers and sovereign wealth funds and so on. So we've seen sovereigns allocate to Bitcoin equities, but we've not seen sovereign yet allocate in size to digital credit issued by Bitcoin equities. So I think this next 3 years, we will see sizable investments from large sovereigns in digital credit products. And once you see one, like basically for digital credit, you need a BlackRock moment again. You see, like Bitcoin didn't have its BlackRock moment until the ETFs. And then when there was the ETFs of BlackRock, every institution in the world said, okay, now the carrier risk is that I don't adopt Bitcoin. Well, it will be the same. At some point, there will be a player that will be so big that will adopt digital credit that every other one will be in the obligation of adopting it as well. And there, we will not be talking about power anymore. We'll be talking about size of investment, and that will be much more fun.
One of the bigger developments in the last few months on the Treasury space was the adoption of a USD reserve. STRE made the first step there, and Strategy actually adopted it a bit later. But what are your thoughts on this in general, and is that something that you would consider as well for Capital B?
Well, a few months before, when we published our results for the first half of year, we announced as well last year that we had an operational reserve with euros and an operational, of course, reserve as well of Bitcoin. So we literally have Bitcoin that is not part of the 2,823 BTC that we have as part of our long-term Bitcoin treasury company strategy. We have as well Bitcoin as an operational reserve. And so on top of the cash that we have as well. So, and that was on purpose to say, look, we want to have the option and the choice of what we do in the market. And we want to have the time to carefully select what we do and to assess the market opportunities. So that's been quite important for us. In terms of the USD reserve, it's been a bit different because what we've done is every time we do a capital market operation, we have a small, very small percentage that we keep into operational reserve conservatively. And what Strategy has done is a bit different, is to literally do a capital market operation and allocate 100% to the USD reserve. So what was significant here is it was the first BTC negative yield, negative BTC yield operation as a complete operation that was performed, because it increased the number of shares and it didn't increase the number of Bitcoin. But that was like, it's like when you take one step back to do 2 steps forward. So it was to say, okay, I do 22.8% BTC yield this year instead of 25, but then I will sell more digital credit and I will be able to take back that percentage over time. So I think that's been extremely important for the industry, because Strategy has basically shown the market, look, you tell me that I cannot pay my interests, but I can have 2 years of operational reserve for that purpose in USD. And following that, there was the stretch that came to par and SATA as well. And I think that's quite positive. Then on the other side, I think, and I'm sure Strategy doesn't forget about that, but the importance of the key KPI of BTC yield, in my view, remains the North Star and the most important thing. because for the equity, what matters is really both the accretion of an operation in Bitcoin terms, which is the BTC yield, and the future potential of BTC yield. So basically, with the USD reserve, Michael has increased the future potential of BTC yield of strategy because it has increased the potential of issuance of digital credit, which is non-dilutive at issuance. So in that respect, I think net-net is a very important and positive evolution of a company that demonstrates that as an operational company, it is able to adapt to market conditions and to do what is needed to maximize the capital raising operations and the BTC yield in the appropriate time in the market. So I think companies need to carefully look at the BTC yield of the operation, and also not forget that a company is also about the future potential. So that operation was about maximizing the future, and I think that's quite important.
Yeah, I agree with that. It was sacrificing short-term BTC yield for long-term growth. But what was interesting in the short term is you saw that the market doesn't really understand those products yet, because when they announced the the USD reserve, the preferreds didn't go up, even though they were massively de-risked, right?
Well, instantly, not maybe, but after that decision, they've been trading massive volumes at par, and Strategy has also, with its latest purchase of 22,000 BTC, has issued a lot of stretch as well, with very large volumes, and I think that's extremely significant. Like. Just Stretch has hundreds of millions of dollars of volume, and for a year one, I think it's extremely significant.
Yeah, we forget the scale at at some moments because the numbers are so crazy, and it almost like last week they issued 300 million, as you said, but it's almost a side note because at the same time they issue 1.8 billion of common stock, so it gets lost in the whole picture. Right?
Exactly. So another aspect I think that gets lost here is that this purchase alone is the equivalent of 1.5 months of Bitcoin mining supply. So, and on top of that, if Strategy continues at this pace, it could accumulate like 300,000 Bitcoin a year, all other things being equal, of course, but that's extremely significant. Like 2 years ago, people were saying, oh, the important factor is that more and more companies adopt Bitcoin. And here you see one single company removing the possibility for short-term bear market happening, basically. So it's extremely it's moving the market, basically. Like when you have such a consistent buyer of Bitcoin, the effects are extremely important on the market structure. And there is a lot of other market players, but consider one or two orders of magnitude of this in the future, and the size of the potential purchases of Strategy in the future. At some point, as Michael says, it could be like 1 billion a day. Sometime, like in the future, it could even become 10 billion a day. And the dollar is continuously going down as well. So it's just a matter of time, and a matter of positioning, and a matter of consistency. And over time, I think also Strategy will get monetized, will get into the Magnificent Seven, and it will you will have the assets that are the most capitalized in the world. You will have Bitcoin, gold, silver, I don't know, but you will have Strategy there, and that will be, I think, quite systemically significant for the industry, for America, and for the world. And I think the significance of what we are doing here is really not taken seriously. And it's normal because it will be taken seriously when it's at other types of orders of magnitude. The relationship between the different factors is also extremely important in the exponentiality of what is happening there. So uh, as Bitcoin grows, you have the ability of strategy growing, and as the ability of strategy is growing, strategy is buying more and more Bitcoin in terms of course, dollars. Then the number of Bitcoin becomes harder and harder. But that's where you have like escape velocity, depending on the growth factors, where in order to have as much Bitcoin as strategy, even a government would have to buy Bitcoin. So in that respect, then strategy could do much more massive amounts of ATM and stretch issuance and so on. And so that's where you see that the price prediction of $5 to $10 million are extremely probabilistically accurate in my view. So the ability to buy Bitcoin at 90K, it will be considered as a generational opportunity. And I think we will smile at that period where people were doubting about the opportunity for a company to adopt Bitcoin. I feel like it just doesn't make sense at all. And so the whole Magnificent Seven might even be composed of companies that have Bitcoin on the balance sheet, So, but it's not needed as well for what I mentioned. You just have to have 5, 10 players that are completely focused on it, and they can really create a lot of convexity for investors. And then that convexity also gets reinjected into the companies themselves. So that's it will become a monster, as Michael says, and not only strategy, but the industry players that are focused on deploying their strategy as well. So Capital B is positioning for this over in Europe, and the market is huge. Credit is as significant as the US and Japan. Liquidity is more important in the US, a bit more fragmented in Europe than in Japan. But in terms of institutional flows, you can also expect a lot more controls by Europe in terms of capital flows going outside of Europe in the future. And so a lot of those capital flows will be redirected to European-based companies. And that will be extremely beneficial as well for Capital B.
And yeah, so we just mentioned exactly the sheer amount of Bitcoin buying that's happening on strategy side, but you also have, I don't want to call them competitors, but other Bitcoin treasuries also coming in the space and so on. And you have this goal of having 1% of all of the Bitcoin supply by 2033. With this amount of Bitcoin buying, do you see that your goals can still be achieved, or how do you see this now?
Yeah, I think it depends on our ability to execute our plan and to issue the best quality products over in Europe. And the path can be bumpy. You can really exceed your expectations one year and go a bit lower the next one, and so on. But the big picture is this one. And sometimes we have gone up in the ranks by accumulating Bitcoin, and sometimes you go up in the ranks because companies have lost Bitcoin, or companies have done bad choices and they don't move, or they literally made bad business decisions and lost money. So in that respect, we are extremely conservative in what we do, and we think that this discipline will be important going forward, and that you can have at any time a bear market of 2 years, and that you need to be ready for that. The less funny part is that sometimes you can get bored as an investor by less activity. The good part is the company is also making a lot of choices to prevent from bad choices. So it's like you have some opportunities, but sometimes you prefer to pass it on because there is a bigger one at the end of that tunnel, and the light waits you there, and you have the capacity to really make a transformational change. And so that's what strategy has done as well. For example, they have saturated the convertible market with so much size, and then they have shifted to the preferred side, and now they have requests for more convertibles, but they prefer to focus on the preferred side. With our size right now, we have the opportunity as well for convertible notes because we have not used them in fiat, for example, or in an institutional way in fiat or in Bitcoin. But at the same time, we also have the opportunities of the perpetual potential instruments and the Bitcoin convertible bonds. So, as well, I think one important aspect is the stock price. At the end of the day, the investors invest in the stock, and we take big consideration in what we do every time with the offers and the negotiations that we have, considering every type of shareholder, and we have continuous discussion as well with shareholders. So, for example, next week we have a live Q&A with shareholders, and we've done that a lot of times, and we listen to questions and feedback, and we do our best to interact and to take those in consideration. So it will be a long road to 1% of Bitcoin supply, but that's our ambition, and I think it's the most important one.
So just being conscious of time, I would have one last question. Maybe you can answer it with a yes or no. Is you've mentioned that in order to do those perpetual preferred shares, you also need scale, and we've seen some M&A. So is that something that Capital B is also looking into?
We always, of course, consider any opportunity. At the same time, this is not our focus. M&A can be extremely time-consuming, uncertain, and risky. And so in that respect, it might not be the thing that we will do, but we'll remain open, and there are opportunities. It's just that, it's a matter of prioritization. And today we have a lot of opportunities aside from M&A. And we have the opportunity to really grow towards our objective in a short order, relatively, of course, to our targets. But it requires focus, attention, and full team effort to deliver, and that's where we are focused on. M&A opportunities may arise, but if they exist today, they might exist tomorrow. What needs to be done is the structural evolution of the company, so that we have a Bitcoin accumulation machine that is the most comparable to strategy over in Europe, and at the same time have one of the best growth engine with the capacity to do large scale private placements with key strategic shareholders, both in Europe, in France, in Luxembourg, and in the Middle East with our subsidiary in Abu Dhabi as well, where we have a lot of discussion. So that's where we stand, and that's the focus, more on the issuance of digital credit than on potential M&A.
All right, Alexandre, thank you very much for your time, for your generosity. And where can people find you just before we wrap up?
On my single chair That's where I am. I'm on X at Alexandre Laizet and LinkedIn as well. And yeah, please remember to keep one chair and to be focused on the most important thing, which is Bitcoin and how to accumulate as much of it as possible.
Thank you so much, Alexandre. See you on the next one.
Thank you so much. Cheers.
How many chairs are you sitting on right now?